About 6 months. All right. Good morning, everyone. Okay, go in here. Last night's S&P session, incredibly solid, considering that the previous day's session we were up 30 points, about 1.7%. You can see there we just kind of drifted back up more or less toward flatline. I think there's a couple of people out there taking profit, but also I think people, no one's too inspired to sell here ahead of the year end. So we did see kind of a mixed bag in terms of the sectors here, but we're looking for some sort of maybe consolidation around these levels and potentially push higher if we don't get a pullback over the next session or two. I think that's exactly what will happen. Okay, we've got in Asia, we had Shanghai that was down again today. We were down over 1.5% in Shanghai. I believe they've been down for 9 sessions in a row. Hasn't affected most of the other markets around the globe. Really interesting what's going on there. You're seeing a bit of a liquidity crunch in the interbank market. Rates have risen by over 300 basis points over the past 3 weeks, if I'm not mistaken. The SHIBOR rates have just really kind of gone up there. And put a little bit of pressure, I think, on some of the interbank lending. The Chinese central bank hasn't really come in and made liquidity to the same extent that they had previously. So that's I think the reason why China continues to underperform at the moment. I think the second they really come in and pump in enough cash, I think we'll see a nice rally out of Shanghai, and it could be a nice little tail effect to the rally that we're seeing elsewhere in the world. Hopefully that'll come later and give us a nice little finishing boost. We did have Australia that had a great run this morning. Up over 1% to kind of separate itself from the rest of the Asian pack. But we continue to see this morning, we're seeing a lot of dollar strength. We're seeing it against the rand. We're seeing it against the euro. We're seeing it against the yen. The yen's back out at 140, or sorry, 104.40. So continue to see the risk on trades happening in our market. There's no corporate action to speak of today. Market data out. We've got the BOJ 2014 monetary base target, which was released this morning and came in line. We have German PPI numbers right at the open, also consumer confidence numbers. We've got French manufacturing confidence today. We've got Italian industrial orders. We've got UK GDP quarter on quarter. We've got US GDP quarter on quarter. We got Italian retail sales, personal consumption in the States, GDP price index, core PCE, consumer confidence. And then over the weekend, we're going to see the Bank of Japan, this later tonight, the Bank of Japan monetary policy statement. So we continue to see, we've got a lot more data that's out today. Yesterday, we had a little bit of less than stellar data out of the States. To say the least. I think it was the biggest skew in the jobless claims numbers for over 6 weeks. So we'll have to see if that's kind of a one-off wonder. They tend to shake all of those kind of numbers off in the December season because there's so many kind of part-time hiring. And a lot of those guys move from full-time to part-time, and I would have thought that's exactly what happened this year, especially considering the change in legislation around Obamacare and having to, give people a hell of a lot more benefits if they're full-time employees. So I think that's why the market was able to shake it off, and we'll probably be able to continue to see that until we move out into sort of further into January. All right, let's jump into the maps. All right, first thing that we want to have a look at this morning is the Aussie, I believe we're going to look at first. Where is this thing? There we go. All right, look at the Aussie here first. What I wanted to show is simply the sort of flag pattern. We're going to go through about 6 or 7 charts like that this morning. They're just flag patterns all over the show. You can see there, even though we did close lower than we opened, that little red dot there, we can see we popped up to the upside of this flag. I think we want to look to see this thing stretch its legs maybe a little bit more. Sorry, that's this morning. That we're just breaking out of it this morning. So if we can hold above basically yesterday's highs, I think we can continue to push higher and really make a nice breakout, nice rally into the year end. All of our charts are really starting to shape up this way. They all came back to find some sort of support. You can see the Aussie, sorry, I drew that poorly, found some sort of support here on October lows. We managed to push up off of that. Now we're breaking up to the upside of the flag pattern. We'll show a bunch of charts that are going to look similar to that in a minute. The next one I'm going to look at is going to be spot gold. I'm actually going to back all the way out to show a 5-year chart on this. Show that we're having our lowest close. We had our lowest close yesterday since 2010. And you can really see here, it's hard to see on this one because it's a bit of a wick, but if we actually go back into a 1 year, you can see there in terms of closing lows, we took it out yesterday, going all the way back to 2010. Remember, we had this head and shoulder pattern where we really broke down out of, and I think the height of the channel of that head and shoulder pattern, and breaking down through the neckline, it was projecting us to a target of 1130. So I think that we can definitely get down to that 1130 level. And if you take it simply from the height of this channel all the way to dropping out of lows, then the target obviously gets even worse. I know a lot of the people, I think Goldman was out last night, they downgraded their forecast on gold in 2014. A handful of others also kind of been bearish on 2014 calls on gold. Really, I think until we see any inflation creep into the system, you're going to continue to see a lightening in gold. That's been such a major part of portfolios and different fund managers. And we've seen the same thing in the stocks. I mean, if we look here in Anglo Gold, you can see Anglo Gold also took out its closing lows of the year yesterday. It's a scary concept to try to short these things. I think the low was, let's see here, the closing low previously was at 1750. Yesterday we closed at 1680. So we did take it out only narrowly. But I think, in my mind, that we are going to continue to see a breakdown. I really think we broke down a little bit sooner. I would say that we broke down somewhere around there in Anglo Gold. But bottom line is we've broken down by any account, and the target is significantly lower. I think we can take a target from right here at around 161, 162, call it, and a breakdown, whether we broke down at 135 or whether we're breaking down at 115 or 116, doesn't really matter. The bottom line is the target's definitely lower, and you just got to be really careful, especially we've had a lot of guys that we know of that have been hurt trying to bottom pick these golds. Until something changes here, I think that there's a lot of stale longs out there that are just continuing to get margin calls, continuing to just get tossed out of these things, and just every bounce is to be sold until further notice, I think, in these gold shares at the moment. All right, Barlow's. Barlow's one of the charts that we're going to show. One of the first ones we're going to show, kind of with this flag pattern. Actually, just pop it up here a little bit. You can see here if you take it from closes, we've already broken out in terms of the flags. This is one of many here that have this type of pattern. We'll show Sunlam. Obviously, we've shown this chart a ton of times over the past few weeks, but we finally really got our definitive breakout. It happened yesterday. I think the fact that we've gotten above there, is incredibly significant, and I think what we're seeing in terms of when we're seeing the index breakout as well, very, very important, and I think we're going to see a lot higher targets in some of these shares. Remgro is the next one. Remgro is the next one. Nice little flag setup. We really just popped out the top of this one yesterday as well. I mean, we were trading 187 2 sessions ago, and probably 400,000 or 500,000 shares. We already closed above 200 yesterday. It's an incredible couple-day rally, but we've just popped out the top. I don't see any reason why this thing can't take out highs of the year in the next few sessions. Standard Bank, we saw make a nice little breakout. We've actually seen this one kind of come out of the flag, I think, already. It came back down and tested the support on the flag, held it nicely, and now we're making a move higher. But it's important that out of this little consolidation, we've seen it take out that recent high right around here at 124. So I think we will test the highs for the year in Standard Bank over the next few sessions, probably sometime before the end of the year. And the last one I'm going to show is MTN, which doesn't really have so much of maybe it was flagging here a little bit, broke out, but bottom line is here we're looking at a little bit different chart now. We kind of just we're kind of coming up again and testing resistance. This thing has been an incredible performer over the past few sessions. We're going to look for I would actually just wait if you're looking for a breakout here. Wait till this thing can get above 205. When we get above 205, which is the highs of the year, I think we can potentially go. Yeah, right now technically our market's just looking to break out, so just be careful, guys. We're going to be at the end of the year. We're going to see a little lack of liquidity. We could see a big move in certain equities over a small period of time, and it might not happen on a whole lot of volume. So even if you see a quick 3, 4, 5% up spike, in 1 or 2 days on a share, it doesn't necessarily mean it's time to short, because it's kind of a special time of the year where those kind of things can happen and just stick. And that's it for today, guys. Thanks a lot.